So you need to do what you have to do to keep your household running. Hi guys, it's Elena from Financialdemics, where I give you the tips and tools to manage your money, increase your savings and your income, and decrease your debt. And today we're talking about the money mistakes that you should avoid. If you're looking to get your money right and build a solid financial foundation, then go ahead and hit that subscribe button so you don't miss another one of my uploads. Financial mistakes that you should avoid. I don't know about you, but I have made a few financial mistakes in my life. And so I want to share some of those mistakes that you should actually avoid so you don't make the mistakes that I've made and you can be ahead when it comes to managing your money. The first money mistake that you should avoid is spending more than you make. If you are running out of money, or you are borrowing or using your credit cards to get you to the next payday, then you are living paycheck to paycheck. Spending more than you make will keep you in that paycheck to paycheck cycle forever. And it'll keep you from things that you actually want to do, such as having great experiences with your friends, like traveling to countries that you've never been to, or even traveling within your own state. You'll end up being in a place where you won't have enough money because eventually you are going to hit that wall. And so because you're living that paycheck to paycheck lifestyle, eventually you're going to start building up debt. It's going to keep you from having a savings and really just taking advantage of all the options and opportunities that become available to you. So if you feel like you're in a paycheck to paycheck cycle, check out my financial checkup video, which I will link right here. And also I will have a link to my financial checkup checklist. It'll help you go through a process to see actually where you stand with your money and help you evaluate changes you need to make to stop living paycheck to paycheck. The second money mistake that you should avoid is not having an emergency fund. This is one of the mistakes that is talked about most in America. But let's think about it, right? In 2008, we had the wildfires out in California where people had to leave their homes and go somewhere else for an extended period of time. In 2019, and really the end of 2018, going into 2019, we had the government shutdown. So if you were a government employee, you either were working without pay or you just wasn't working and you wasn't getting a paycheck. We do know that depending on your status, that they eventually paid you. But that government shutdown went on for a couple of months. And yes, some of the creditors were very flexible with your credit terms as far as when you can make payments and things like that. But I'm sure it was a very stressful situation for a lot of people, especially when you're just trying to buy the basics like food, right? And then look at where we are now. There are millions of people unemployed at this current time due to what's going on in America. Guess what we need? Emergency funds. And I'm not downing anyone who's going through those situations, but if those three situations, 3 years in a row, do not make you realize that an emergency fund is important, I don't know what else will. So you definitely want to start saving for emergency situation. If you're not sure where to start, then I'll link my Build Your Savings playlist. And all through there, I talk about how to start saving. I even start with how to start saving on a low income, and you can build from there. The third mistake that you should avoid is racking up debt. So I personally think there's nothing wrong with debt as long as you have the discipline to manage it properly. So if you use your credit card for, say, points and you pay it off immediately, not a problem. The problem comes into play when you use your debt on the regular and then you're getting into the place where you cannot afford to make your payment. When it comes to your student loans, your goal should be to pay it off as quick as possible, as long as that fits your situation, especially if you make a decent income and you don't qualify for a loan forgiveness program. You don't want those student loans sticking around forever because they will interfere in some of the things that you actually want to do. The fourth mistake is not saving for retirement. So when you actually save through your company's 401k program, 403b program, if they have a 401a in which they invest for you, if there's like a 457, or even if you are investing in an IRA, you're actually investing. And it's for retirement. It's for when you have gotten to the point where you no longer want to work, and that money is going to help you take care of yourself, do the things you enjoy in your retired years. But the biggest thing is that when you are not saving towards your retirement, you are missing out on compound interest. Now, compound interest works something like this. If you start investing around 21 years old and you're investing about $100 a month with an 8% annual return, in 40 years, you should have approximately $351,000. There's some change added to the end, but we're not going to worry about that. So as you see, your $100 a month over that time frame has compounded into more money. But if you actually start 5 years later, so when you're 26 years old and you invest that $100 a month with an annual return of 8%, and you invest it for the 35 years, right? Because now you have less time, you actually will end up with somewhere around $231,000, which means that you're actually going to miss out on $120,000 because you didn't invest earlier. So if you haven't started investing in retirement already, it's time to start. The fifth mistake is buying an expensive car. I have made this mistake, so I know this one well. So what does Jay-Z say? If you can't afford it twice, you can't afford it. A lot of times you think that because you can afford the payments, then you can actually afford the car. But people tend to forget about maintenance. You have to take care of those cars. And when your car is more expensive, it has more expensive maintenance. I mean, even the gas alone is normally more. Like, who wants to pay for premium gas? It does make your car run better, but I do know that. But nobody wants to pay for premium. I barely want to pay for regular. So here are some things that you could really think about when looking at vehicles. Your car really shouldn't cost more than your income. And it really even shouldn't cost more than half of your income. And for the people out there who don't actually buy their cars, but you lease your cars, unless you are in a business in which you use your car on a regular, like for example, what comes to mind is a realtor, but like you're a realtor, you're driving people around, showing them houses and things like that. Then really when you're just consistently leasing a car, you are consistently renting a car, like consistently. And you will consistently have a car payment until you actually decide that you want to maybe just buy a car. Just keep in mind that cars are depreciating assets. And so you want to actually put your money into something that's going to eventually make you money, not necessarily take money away from you. Keep that in mind the next time you're looking for a new car. The next money mistake is not discussing money with your potential mate or your spouse. Financial compatibility could really make or break a relationship. I know a lot of people talk about like communication, selfishness, and things like that. But really, when it comes to money, a lot of those things are shown through your use of managing your money. It's really important to know how your significant other manages their money ahead of time so that you can save some headaches later on. When you marry someone, you actually marry their finances. And a lot of people say, oh, well, that's why we keep our money separated. But the reality is, even if your money's separated, that person's finances may still affect you, especially like in a situation where, you know, maybe they happen to be out of work or something like that. They don't have income coming in. Even though your finances are separated, who is covering their portion of the bills if that's what you all are doing? Like, somebody has to step up. You really want to be on the same page with your significant other when it comes to your finances so that you all can work towards joint goals together. And sometimes when you don't discuss what's going on financially with each other, then you end up finding out things like maybe a person has, you know, more debt than you thought. And then you feel like that person committed financial infidelity, which is maybe not the case. You know, it's just that y'all didn't discuss it and you haven't been discussing it. So make sure that you discuss your finances with your significant other. Even if you are the one who has the high debt, make sure that they understand, you know, what you have and what your plan is when it comes to money, because you don't want to be in a place where your significant other wants to do something big, like maybe buy a house, and they want to do it quickly. And then all of a sudden you're like, hold up, pump the brakes. I can't do it quickly because I have all of this going on. You want to keep that line of communication open. And speaking of buying a house, the next mistake is paying too much for housing. And this applies to renting and buying. Just because you can afford a certain amount doesn't mean that that's the amount you should spend on your housing, especially if you have other goals that you're looking to reach. The general rule of thumb is that you shouldn't spend more than 30% of your income on housing. So if you make $3,000, you shouldn't spend more than $900 a month on housing. Now, I know that's kind of rough in some cities. That's rough where I live. You should look into ways to keep some of your expenses down, housing being one of them, because you definitely don't want to be in a position, especially if you're buying, where you're house poor. Like, you have this great house, but you can't do anything else, and you can't even fix it if something happens because you are paying a mortgage. And when it comes to renting, you want to keep that same thing in mind. Like, you don't want to spend a lot of money on your housing. If you want to look in a nicer area, maybe you look into having a roommate. And I know, like, we get to that age, because I was there, like, I don't want to live with anyone. I want my own place. But when you think about it, when people have roommates, like, they have a little bit more disposable income because you're able to do more with your money. And that could put you in a better position because you have additional money to put towards investing, or, you know, starting a business or having other experiences, so that later you're really able to live how you really want to live. The next mistake that you should avoid is not investing in life insurance. I know lots of people think insurance is a scam. I always say to people, is it a scam when you actually need to file that claim? So here's the thing. A lot of people don't think about life insurance. You're not required to have life insurance like you're required to have auto insurance on a car. So here's the thing about life insurance. Life insurance is there to help cover your family's expenses after you pass, right? And when I'm talking about your family, I'm talking about if you have children, if you have like a spouse or something, like, that's part of what life insurance is there for. Like, if your income was helping support that household, then that gives them income to help support that household after you are gone. Life insurance also helps pay for the funeral, because y'all, if I see another GoFundMe, look, funerals are expensive. And so some of that money from your life insurance can help cover those costs, so that your family doesn't have to stress out about how to actually take care of your final arrangement. So if you are actually looking for life insurance, I have partnered with this great company called Bestow. They offer term life insurance, so it's for a time frame. And the thing about term insurance, if you get it for that time frame, during that time that you're paying for the insurance, make sure you're also still saving and preparing, so that After that term, the thought is that you have enough money set aside to pay for, final arrangements to put money towards taking care of your family members. And so they don't have any medical requirement. I really think it's a really easy program to sign up for. And so I'm going to drop a link below. Check that out if you are interested in signing up for life insurance. The next mistake that you should avoid is not learning new skills to stay competitive, and also not having a side hustle. I'm going to combine these two together because actually they do work together with each other. So if you are working in a field in which you enjoy, make sure that you are learning skills continuously to keep yourself competitive in the job market. Sometimes we get complacent working for the same employer. We enjoy our job. It's flexible. I like my boss, but you should always keep yourself competitive. So if you want to learn new skills, you don't necessarily have to go back to school. You can look at different courses on like Udemy, on Coursera, on Skillshare to increase your knowledge in different areas and to keep yourself competitive when it comes to your field. You can also use those same type of courses or either skills you have from your job to have side hustles. And truthfully, it doesn't even have to be a skill you have from your job. It could be just something else that you like to do. As you can see from my emergency fund mistake that I mentioned earlier, like you should have more than one stream of income because you never know what is actually going to happen. And so you want to have additional money coming in. Yes, maybe it is not covering all of your expenses, but it may be covering a bill. Okay. And so you want to have that money coming in because these jobs are really not loyal. Companies have to do what they have to do to keep their company running. So you need to do what you have to do to keep your household running. So make sure that you keep yourself competitive and that you have a side hustle so that you can have more income coming in. Let me know in the comments below, which mistake have you actually done? I'm telling you, a couple of these are mine. I definitely initially didn't have an emergency fund. I was spending more than I make. I had an expensive car, which means I racked up debt, right? So let me know which mistake you've done below. If you enjoyed this video, please hit that like button and a comment and subscribe. And of course, share with your friends so that they can get their money right too. And I'll see you next week with the all new video. Some of the creditors were very flexible. I know about a number of credits, including Mallory and Bird Box, Dennis, Hedwig, Girl, Crumb, Patricia, Alexa, thank you. Of course. Have a good morning, Alana.